possibly. All right, there we go. So, can you hear me, Pam?
Yes.
So, kind of what we were looking at here was, if you go back over the last, since I'd say about 2001, because I think the jump in, well, probably 2000, okay, probably 2019, the pandemic, right? And prior to everyone sitting at home and not having anything to do, right? It was the era of what do you do, So everyone got Robinhood, and all the kids learned how to, use options and calls and puts, and it opened up a door where trading was actually like something that you could do as a career, right? Prior to that, it was kind of sought after like a highly skilled position that you had to come out of college, then you had to go into finance, then you had to go to what's that? USB, Schwab, J.P. Morgan, and they used to have, they still do. They had these yearly conferences or kind of like job hunting, where all the people that are traders, you can go to this thing and you sit down and you trade, and they analyze you. And if you're picked to be a trader for one of these massive companies, then you go through an 8-month course of learning how to trade, right? Because they trade very specifically, and they want to see your skills. And if you get through that at the end of 8 months, then they hire you as a trader. And I think the corner turned in that time where everybody was sitting at home, and you didn't have to, you could actually log into an app called Robinhood, and Robinhood turned on that feature called futures, and you can do calls and puts, and you were able to do these stock things. And all of a sudden, stocks, because of the situation of the economy in the world, had plummeted because everybody the world was paused for a year. And when it started to come back, it allowed all these people to kind of get into it, and that's what it was. Everybody's watching YouTube, and people like, oh, I found this short on GameStop. AMC is, cheapest price ever. I mean, I bought a ton of Spirit Airline, American Airlines. I made a lot of money. I bought Hertz for like 80 cents, sold it for $5. It was crazy. And that moment there in that 2019, 2020, it opened up a floodgate of, literally, I would say it probably 10x the traders market. Like, most people would have never traded, and now it was like, you'd probably get maybe 4 or 10, maybe 4 people out of 100 would think about trading, and then all of a sudden it was like 50 to 60 people out of 100. It was insane. And since that period, we went through where, then crypto really came in 2021, and that gave birth to a whole different section of investors, where they weren't, all stock investors. They were new investors, and they were like, oh, I can buy and sell crypto. And all of a sudden, 2021 bring in another massive amount of people into the world of trading, right? And that really was the essential of all the information that was taught over the last, 40, 50 years in trading, probably 80, about almost 100 years, where, all the philosophies were the same, buy low, sell high, trading with, candles, right? There was a Japanese guy who used the candlestick method, who used to literally draw out charts on his own. And then Richard Wyckoff came in, and he was talking about, accumulation, springs, and then, selling points. And then, so it was a very, like, everything was very simple: buy low, sell high. It's not that hard. And then all the theories and strategies came out of, okay, this made this. There's a pattern. There's a bull flag. There's a bull pennant, and there's cup and handles, and there's head and shoulders, and that really has, from that time in 2021, 2022, is where all these people wanted to become charters. And then in 2023, everyone wanted to teach everyone charting. So the last 2.5 years has been just education of what I call Trading 101. And for a time there, we were teaching and developing strategies based on, Trading 101. We just took what people did and made it 10 times better. And it got to the point where with the tools and all the leverages and all these other things, it was like the goal of making 5 to 10%, which was a massive trade, became so easy when you had 100x leverage, 50x leverage. I mean, it was literally, you needed 0.5% when normally you needed 10. Now you needed 1/10 of what you used to do to make 10 times what you used to make. Astronomically amazing. You know what I mean? And how long have you been looking at trading, Pam?
So it's probably been like 13 or 14 months now.
Yeah, so you're right. You're right in that cusp. Because once the 2023 and 24 came in, that's when all the information was out there. And it became like everybody's trading. Like everyone is charting. And it was a massive amount of information. And what we've done over the last, couple years, about 3 years, is I was watching the transition, and I was, I knew what it comes down to is it's not all the strategies and all the theories and all those things, because if people who know me used to watch me in 2021, where I would trade with one indicator called the RSI. And I could trade on the 1 minute time frame and make tons of money all day. And then it became where, just changes in things. And so we kind of just took all the stuff and built a lot of ways to do it. And, so that's what was so confusing over the last couple years, was like, how do people fail? Right? Because when you look at the numbers over the last 70 years, it's still the same number. 90% of people fail at trading, and the top 10%, where only 30% of them actually become efficient enough to make 6 figures plus and actually earn a big living. And that's the enigma. That's the puzzle. So when we dug into it, and I've dug into it for the last couple of years, I was trying to figure out, to me it was like, well, maybe it's the way it's being said. Maybe it's the way we're using the language. Because back in the day, the language was like, oh, we have a fair value gap going into a golden pocket. And most people be like, what? What's this? What's that? Right? And we were talking in languages that people didn't understand. And now people understand the language, Most people know when it's hitting a Fibonacci. Most people know when it's support and resistance. Most people know what a head and shoulders are. Most people know what bull pennants are, right? Everybody kind of gets the lingo. And so what I did this year was I kind of, because in order to fix something, it always comes down to information. The more information I have, the more ways I can fix something. The more information I have, the more I can critique something. And what I realized is, after building so many strategies, is that no matter how much strategy I built and how I made it easier and easier and easier, when I let people do my strategies or do my trades, they would find a way to change my strategy. They would find a way to do it their way, and then they would lose. Now, I'm a very realistic person. I'm the guy who goes up and I'm like, hey, I got to make a chocolate cake, and I find the best chocolate cake. And then I find the person who made the best chocolate cake. And I say, how do you make this cake? And when they show me how to make the cake, I write it down, take all the notes, follow the instructions, and I repeat it. and I get the same cake. And I never changed that because it worked. What I didn't understand for 3-4 years was that people don't do that. 80% of people will always change the formula and try to improve it, or push the formula because of thoughts of just making it bigger, and they're always adjusting things, right? And once I realized after 5 years that you can't change people, I realized it's not the strategies, and it's not the methods, and it's not the candlesticks, it's not the patterns. It's that people will always change what they are doing because they're always striving to be better. They're always striving to recreate the wheel, right? In sales and marketing, we call it basically, you don't need to reinvent the wheel, you need to push it. So in management trading, in teaching and training, I used to teach, companies and managers like to just push the wheel, right? How to lead by example, how to be strategically, stable, how to have a system, how to have a structure. Because it's really simple. People fail, systems don't. And that was our motto. That's what we used to teach. People fail, systems don't. Right? Systematically doing anything will always be a cause and effect. Right? Whatever you do, if you do it the same time 100 times over the same way, you're going to get a relatively same result. And once you find a relatively same result that is profitable or successful, then you just rinse and repeat, and it's basics, right? So the last 5 years, dealing with a lot of people that aren't of like industries that I taught and trained, and professions that I've retrained, I realized that most people don't have that lessons. They don't have that schooling. They don't have those that background. So what I did here was I realized that back testing all my trades and back testing how I trade and back testing all the things, it doesn't matter what I do because I'm a different person. So what I started to do this year was I started to do accounts where I would give people sub accounts, and then I would watch their trading, right? Because that's why you'll see me tell people we have to have data, we have to collect data. You have to do a 10 trade review, right? The simplest thing for me is if you're in a course, right? It's like teaching it like school. Is if you say, okay, I'm doing a long trade on XRP or Bitcoin or whatever, I'm entering on the 10-minute. We have so many entries. I'm entering on the 1 hour green moon, entering on the next 10-minute green moon reset. And then you post that. And then you post when you enter. Because all you do is enter a trade. And then once you're in the trade, you go to the Discord and you type your entry. Because that's your record of what you did. And then whatever it does, you post what it did. And then the people who review charts can go back and look at your trade and give you pointers. Simplest thing in the world. The hardest thing for adults to do. It's a very, interesting thing to me that people enter trades all the time but never post their entry and post what happens. Like, I can't really fix anything if I don't know what you're doing. So I went back and I was like, you know what? I'm going to give accounts to people that have issues. And then it's a sub account, which basically means it's funded. They trade, they can go in and out. And then they can, and then I can pop in and look at the trades. And I found the most interesting thing, right? It was when they're executing the system, they do extremely well. And when they don't follow the system, they do extremely bad. And this was the time that I was like, okay, this is information, this is data. Because now I can see it. I don't have to guess, I don't have to wonder. I can literally just see what's happening based on the charts, right? So it's kind of like an interesting thing. So now with you, what I'm coming in is that you're new in the Discord. You're kind of flying through the Discord. You've got your indicators. You've got all that set up. And so I just wanted to see the next thing for us is steps as we start to move forward here, because we want a plug and play scenario, right? So based on the videos that you've watched, right? It's been about how many weeks?
4 to 6.
4 to 6, right? So in those videos, was it kind of like, what we're so here's how it's supposed to work, right? You kind of get the indicator, and then you get videos that could be a 15-minute, a 1 hour, or a 4-hour trade, and they all have steps to going live. Most of the time it's going to be something like the 4-hour RSI is headed up, the 4-hour crosses the 20 line on the RSI, and then you look for a volume indicator, which is normally a 30-minute green moon, a 1-hour green moon, and then you have a live trade. Then the next step would be, how do I enter, right? Which is the most important thing. At that point, it's normally going to a lower time frame, something like a 1 minute, 5 minute, or 10. And what you're doing is you're letting a moon go from green or whatever, if you're going long and it's green, you want it to go red and have a pullback to get a better entry, because the only thing that can ruin a long is the pullback. So you're waiting for the pullback to come, and then you're entering on the next green. Now during the videos, is that kind of what you're getting from the videos?
Yes.
Okay. So
there's a couple things that are not as easy as the videos for me.
Okay, yeah, because this is the part, right? Because this is where we're redoing all the videos, and I'm trying to get is where I'm not getting through. You know what I mean? So from that part, that makes sense. Does that, when I talk about finding a live trade, part one of a live trade is a strategy, right? The first strategy is momentum, which we use the RSI. And then the second part of the strategy is volume, where we use the moon indicator to determine that volume is coming into a trade or leaving a trade, whatever it is. Most of the time the videos are on long. So we have momentum on the 4-hour RSI, then we get a green moon. Does that kind of come through? Part one?
Yes.
Okay. Yes. And then we move to strategy. The second part of that is the entry part, right?
That's right.
Okay, and that's where we move to a lower time frame, either a 5 minute or 10 minute, and we look for a green moon to reset, correct?
Correct.
Okay, is that coming through?
All that I understand.
Okay,
One of
okay.
the hard things, there's one thing that stops me up a lot is understanding when the Elliott wave starts.
Okay,
I just
okay.
get stuck on where I am on the Elliott wave, and I waste all my time, and the play already happened. So that's one of my things.
Okay, no, that's perfect. That's perfect. Okay, so now the next thing is, so the first part is getting a live trade, momentum and value. From the videos you watched, we're pretty clear on that.
Yeah, I think I got that.
Okay.
But the only thing is, on the volume indicator,
Mm-hmm.
I understand that I want it to be above the 10 if I'm going long.
Yeah.
But it's not always going to be. Like, sometimes it's under the 0. It's coming from the bottom. But, we still take those trades, right? So what's the difference?
No. So that would be and we'll walk through that in a second, but I'm glad you have that. So Elliott wave, and then the volume above the 10 line. Okay.
Yes.
So let me ask you, when you watch those videos and we get to the part where you would get into a trade, so let's say that you enter a trade, are the videos, does it make sense on how to post? Right? So let's say you decided you took a trade and you entered XRP long. Do you know how to post that, or do you know how to post the live trade in free chat?
Yes, like the 4-hour green moon RSI up, is that what you mean?
Yeah.
Yeah, I know how to post it, but I'm not confident enough.
Okay. And if you got into a trade, you feel confident that you know how to post that you're entered a trade?
Yes.
Okay.
Not always 100% confident in what I'm doing is like, as I'm doing it right.
Yeah,
Like,
that's fine. Yeah, that's fine. No, because I'm not singling you out right here. What I'm doing here, just so you know, is that because I know you've had the last 4 weeks of watching the videos, and the key things to the videos that we have to have, or we have to remake them, is that someone understands how to determine a live trade, and then post that. And that would be like 4-hour RSI headed up on XRP. And then the next thing is the volume. 1 hour green moon on XRP, waiting for my entry. Then the next post would be entering on the next green moon. Right?
Right.
And then the final entry is entered XRP on the green moon, long 20x, entered at $1.47. And then when the trade ends, posting, going back to that same post and just hitting reply to your earlier post and posting your banner or whatever. So if you don't know how to get the banner, we can go over that, but posting the result of the trade.
Okay.
Okay.
Am I supposed to put that in the free chat, or am I supposed to?
Yeah, no, free chat. We're gonna go free chats on that because I have the 10 trade review area, and this is what I'm covering this week. So this week, what I want to do is I want to cover where we clean this up, right? Because we have areas where we were posting 15 long trades, 4-hour trackers. We have 10 trade review areas. I'm going to eliminate a lot of the folders and come to where we're just active in the free chat, right? Like posting the information, because I think sometimes, you don't see it in the free chat, and then you don't, people don't, I guess they're not as, like me, I hit so many folders, but it becomes where they're not fluent enough to go see the 10 trade review and post it there. So I think a lot of times it's just easier for people to be in one chat and post everything. You know what I mean?
Yes.
Yeah, so that's where I'm trying to figure out, because where we're at now, we're still in the beginning, is we're trying to get to where information is seen, posted, looked at, reviewed, and utilized, right? And so that's what I wanted to kind of get the information on the videos, because I'm thinking like, okay, maybe I'm not, sometimes because I've done this so much, we'll be covering something and I don't go through every single step because I think it's redundant. But then again, I go back and someone's like, oh, I didn't post, or I didn't do that. And it's like, why? I've made 5 videos about just posting. Like, we have to post because we have to get the data. Like, I can't tell what's happening unless I see what's happening, right? It's kind of like the basics.
Practicing in a different exchange practicing point.
Yeah.
You don't have a practice exchange in BitMEX. That's why I posted it.
Oh, yeah. I mean, yeah.
And BitMEX doesn't have one.
Oh, you mean like copy trade or something? Or like paper trade?
I mean, like mock domain, or,
Yeah, like paper trade.
Like fake money.
Yeah, paper.
I know it's not great, but at least I can make sure I'm doing it right.
Yeah, paper trading.
Right.
Okay. So so now what I'm going to do is I'm going to cover kind of a little bit of the information of what I'm saying. Let me share my screen here, and then I'll cover the things that you're talking about, which is you guys should be able to see my screen now, and then we'll cover the Elliott wave thing, and then the I think the moon thing you said.
The moon thing.
Yeah. So you guys right now can see my screen, right?
Yes, actually.
Okay. So what I'm gonna do here is kind of show you like what we have here. So you guys see it's a BitNext screen?
Yes.
Okay. So what I'm gonna do is I'm just roll this up here, and you can see down here. We'll start at this bottom one. You see like how it's a $48 win, 16% gain.
Yeah, it's awesome.
Yeah. So when I see this, right, because this is how I review. This is actually great, and I was thinking about actually down the road probably changing the way we do the lessons a little bit different. So what this is one of the traders that's been with me for a while. He does phenomenally well, and then he'll just have days that he just blows accounts. And getting him to post when he enters and post his trades don't always go as the way they're supposed to. So I never have the information as far as like what happened, right? But here, this is called a sub account, right? This is where, let's say you want to do a sub account, right? So you'd send $1,000 to me. I would open an account, create an email address that we would share, and then you would have access to this, and I'd have access to this. And then you go in here and you start trading your $1,000. You make all the trades, okay? All I do is I pop in here and I can see them. And then on some of the trades that you do while it's live or whatever, I can write notes right on the chart. So if you were in a trade and I wanted to write a note, I could come here and simply just type on here and go, I'll just put hello for here. But I can write you a note on the chart. You see hello?
Yes.
Okay. So let's say you're in a trade, right? And I see where you made a mistake. I would just type in something in that scenario, right? And let's say that you entered a trade and the moon wasn't green, right? And I put wait for 5-minute moon reset. And then I leave, right? Now what that does for you is that when you come back to your chart, right, you'll see my note.
Yes.
Pretty cool, right?
That's good.
Right. So that's something I'm messing with right now. But I did this because the problem was I needed to see what was happening, right? So the one thing I notice is when I go back, I see okay, here's 16% gain, right? Good gain. Here's 25% gain, right? Here's 15% loss. Here's 7% gain. Here's an 18% loss, right? 26% loss. 36% gain, right? 36% gain. 25% gain. 61% gain. 25% loss. 25% gain. 14%, right? So the trading, notice how when it's a balance and there's, this still needs to be cleaned up here. Because remember, Trading 102 is a very simple philosophy of understanding. We're not here to win trades. We're here to lose correctly. Winning trades are going to happen. There's so much information on how to win a trade, it's hard not to win a trade. And it's also thinking of it like this. If you do something 10 times, and out of those 10 times, 3 of them do something and 7 of them do something. And the majority is the 7. So the thing that you actually need work on is not the 3, it's the 7. It's fixing the 7 losses or 8 losses versus fixing your 3 wins, right? Everyone's going to get lucky and win 2 trades. And the thing about winning is that it's going to happen because, the more you listen, the more stuff you try, the more you work on something, you're eventually going to figure out something to win, right? But the majority of your trades are losses, 7 to 8 out of 10. And that's where the work is. It's not about winning, it's about learning how to lose properly, right? And I'll show you what I mean by that. So, here you see a 14% loss. We see a 20% win, a 33% win, a 161% win, a 73% win, and then see this is a perfect loss here. See how it loses 8%, 8 or 10, right? Goes forward. Here's another loss. It's only 3. Here's another loss, it's only 3. Here's another loss, it's only 8. And then all of a sudden, we see a 57 or a 47. Right? Where
I see it.
that should only be 10 to 15. So it's 3 times more than he should have lost. That makes sense?
Yes.
And then what happens after that, he follows it up with another. So here we lose 100, 200 bucks, 180. When in reality, it should have been 45 bucks. Then on the next trade, we do the same thing. We lose 100 when we should have lost minimum 25 bucks. So on these 2 trades here, the total loss should have been 50 to 60 bucks. Does that make sense?
Yes.
But instead, it's 300. So to me, that's a $250. If you do this correctly, he actually won $250. Because he should.
Yeah, but then he won up there. He won $300.
Oh yeah.
That's a little bit.
Right. But imagine if that $300 that he won up there had an extra $250 to put in that trade.
That's true.
Because then that win should have been 500. You see what I'm saying?
Yes.
That's how important losing correctly is. The losses down here shouldn't have been 300, they should have been 100. And then he could have put 200 in that bigger trade and got himself an extra 200. So in reality, that's a $400 difference there.
Right.
By losing correctly. Now as we start to scroll, here he goes back down and he goes, okay, I'm only going to lose 15%. You see? But then he does a 64% loss. Once again, instead of losing $30 to $40, we've lost $136. So as we start to scroll through, we start to realize, and this is what I want you to pick up, right? As we kind of scroll through here, okay, and we look at the wins, okay? This is why data is important. This is why seeing you trade is important. Notice that the first trade is a 16% win. The second trade is a 25. The third is a 7. Then we have a 36, another 36. Then we have a 61. Then we have a 25, a 14, a 20, a 30, right? Because we look for 30s, 30s to 40. Then we have 162. The 162 is a $500 win, right?
Yeah.
But here's the thing. We're not focused on winning trades. Our focus is on losing trades. So this is kind of like this is like this. Like if you are trained to go up and playing baseball and all your job is to put the bat on the ball. More than likely, if you can just focus on putting the bat on the ball, you're probably going to hit a single. That makes sense?
Yes.
And every once in a while, if you swing really hard and just put the bat on the ball, you might hit a home run because the pitch was a fastball and a fastball jumps off the bat even further. Now, if you're someone who's trained to hit singles and then every 20 singles, you hit a double, and every 100 singles you hit a home run, when you hit that home run, does that become your new normal?
Well, I don't know.
No, right? Because if you hit 90 singles and you hit one home run, is the home run your normal?
I don't know.
No, right? Because you normally only hit singles, right? So this trader, as we look through these percentages, we can see that it's the average of 20, 25, 30, 14, 33. Let's not worry about the 162. That's going to happen all the time when you are doing something good. The 70s, same thing. We don't need that. Now we over here, we got a 1% win. We go over 3. Here's 105. Okay, here we go. 30, 70, right? 5%. And as we start to go through here, we have 18, 20, 70, right? So we can see that there's an average in the green, right? Here's 53, here's 19, here's 22, here's 88. So if we took all these averages of, 50s, 40s, 60s, 80s, 150s, etc., with all the 20s, we'd probably say that the average is probably about 25 to 30%. Right? What would you think?
Yeah.
Yeah, makes sense?
That's right.
Okay. So when you have that average and you know that on your good days, I mean, here's 277. Look at this. $700. When you have your that's a good trade, right? When you have your average wins and you know that your average win is 25 to 35%, and let's say that we're doing $1,000, we know that we're going to average $250 on our trades. Okay. Now, what that means is, for every trade we win, we're going to have $250 to $350. We can just call it $300. Now, the goal is that the way you're supposed to think of it is the correct way, which is not about the winning trade. It's about, okay, because this is how people normally think. They're like, when they win a trade, they're like, man, I just won 700, right? Then you start betting even bigger because you think if I can get another 300% trade or 200% trade, then I can double. So if I started here, this is let's say here a 300% trade, right? That means that was a $200 trade. Now he's got 700. And he says, well, man, if I do this again on 700, I'll get to 1,400. Right? And if I lose half of this and I do a 50% stop loss, that means I'm down from 700 to 350. But I only started out with 200, so I'm still up 150. See? That's the concept of thinking of the winning trade, right? When you think correctly and you think to yourself, your job is to basically make sure that you don't lose trades, right? Your entire job is not to lose trades. You think of this differently. What you think is this: if my average winning trade is 30% and I'm doing a $1,000 trade, right? That means that I need to create a trade that every time I win, right, I don't want to give that back in one trade. So that means I can't lose 30% on my next trade. And I know that I normally only win 3 out of 10 trades. So that means that I can only give back 10%, or 1/3 of this 300 3 times, right? So it's like thinking I have to protect my profits and make them go longer. So if I win a trade, that one win needs to cover 4 losses.
All right.
Right? So what you're doing is you're not winning to make money, you're winning to cover losses. Because when you look at how you trade, you basically lose 7 out of 10. So you have to cover those losses with your wins. So you have to fundamentally start your journey based off of, if I average 30% on a win, right, which is $300 on my 1,000, that means that I can only lose maximum right? At least $10 on my next 3 trades. Realistically, I'd like it to go further. I would like to stretch it to 4, right? Which is where, I can lose 4 times with 1 win. And the good thing is that sometimes you're winning 25%, sometimes 35, sometimes you win 60. So the reality is every win can cover a scenario of 3 to 4 trades, right? So that just means that, your 3 trades that you would lose there, since your win would only be 30%, 300, that means that every trade you do for $1,000, you are only allowed to lose $10. Does that make sense?
Yes.
Because you have to, your 3 losses, you have to at least cover 3 losses, right? With that 1 win.
Yes. Right.
So that's the game you have to develop. The game you have to develop is, when I win, it will cover 3 losses, right? You're no longer winning to put money in the bank. You're winning to cover your terrible trading habits. Because the reality is, you have to get better at better trades in order to make profit. It's like saying, I guess the way to say it is like this, right? It's like if you start a career, right? A job. Anything that you do takes skill. And when you first start out, you're not going to be in the positive, right? That's like when you start a business, the first 3 years you're red, right? Meaning that you break even or lose money. And just like any skill that you do, if you're becoming a carpenter and you start learning how to become a carpenter, you're not going to be making extravagant, furniture in the first year. You're going to be making average furniture for the first year and then probably throwing out half of it, right? This is a skill set. It takes time to learn the skill. So what you have to do is realize that your good days have to cover your bad days, because there are 3 times more bad days than there are good. So you're not trading to make money, you're trading not to lose money. Does that make sense?
Yes.
Okay. So when you're building this, as you start to make your trades, right? And the other thing that we're doing is, I used to think, and everyone does this too, they go where they start off, and they used to be like, all right, just start off with $10, start off with 20, maybe 50, maximum 100. And what I realize now that I've been watching everybody is that when you start off with $50, right? Because remember, this is a skill. This is a building a mindset. Is that it's easy for me to start off with $50, double it 3 times, move to 100, double it 3 times, move to 200, double it 3 times, move to 400, double it 3 times, 400 to 800, 800 to 1600, 1600 to 32. And that's because I'm systematic. My habits are already built. When you trade $100 and you let's say you have 2,000-3,000 and you're trading 100 because you're just learning how to trade, and you set up a stop loss at 10%, because if you had $1,000 and you were only allowed to lose 100, what would your stop loss be? 10%, right? You could only lose $100. So obviously, if you're doing 100, that means you can only lose $10. So you put your stop loss at $10, you put your take profit at $30, and you're like, all right, let's go. And then you're watching the trade, and then you kind of see your stop loss going down a little, so you move it down to $20, and you're like, it's only $20. And then as the trade starts to go up, it's 110, and you're like, oh, you know what? I'm going to move this up a little, 120. Okay, I'm going to go for 160. And then it kind of goes up there, and it comes back down, and it's at $110 profit, and then it's at 100, and you're like, I'm going to let it recycle, it's going to pump, and then it's, Next thing you know, you're negative $10 and negative 20, and your stop lost out because you didn't take profits when it was there because you were like, well, it's only $25, and then your stop loss was, $10, and you're like, it's only $10. It's okay. I'll lose 20, right? And what happened is, you basically have taught yourself not to be systematic because you're adjusting prices and targets on the fly because what's $10? What's $20? I've got 3,000. But what you don't realize is that what that $10 represents, it represents 100. And you're trying to get to where you're trading 1,000 and then 3,000 or 5,000. So in reality, it doesn't represent $10. It represents 300 to 500. So when you get to that next level and you actually start trading at that level, then the opposite happens where people get worried, like, oh, I don't want to lose 500, and they move it to 250, right? And then they don't give themselves enough room to kind of make the trade go through, and then they get stop lossed off, and then it goes and does the other thing it's supposed to do. So it creates bad habits by not being systematic. Doesn't matter what the dollar amount is, right? It matters of the execution. So we started basically telling everyone, like, you should trade with $1,000. You should have a $100 loss section. That's what you lose. That's where you're at. That's your level. If you want to tighten it up, trade $1,000 and only lose $50. Right? Now what that's going to do for you is you basically said, well, I don't want to lose 100 every trade, but I'll lose 50. Now you have to work on the most important thing in trading, which is the entry. How to enter correctly. How to get in the best position, right? The entry is the difference between winning and losing. If you enter early and it continues to go down, you get stop loss. If you enter late, the move, that's kind of what you worry about. You don't know what Elliott wave you're in. If you enter late, the move has already happened, and then it doesn't have enough money to keep going, and then you end up losing. That makes sense?
Yes, that's exactly right.
So the only thing that matters here is the entry. And that is why, we're making these changes, because when you look at this trader here, right? He does extremely well in his wins, but he's only winning 20 to 30%, right? So here's 13, here's 13. And you can, if you have a $5,000 trade and you make 13%, that's $600.
Well,
The problem here is, look at his losses. When he loses, he doesn't lose 10%. He loses 50. He loses 30. He loses 50. You see what I'm saying?
yeah.
He'll go on a run and win 8, 9 trades in a row, and then he'll give it all back in 3 trades. You see what I'm saying?
Yeah.
So that's where, look at this. How do you not put a stop loss? Do you know how easy it is to put a stop loss? It's like trading. It's the basics of trading. Enter a trade, put a stop loss. You don't have to put a target, but you need to put a stop loss. Because the reason why there's no stop loss here, you know why? So Pam, if you're in a trade, go through the scenario. Some guy enters a trade and he doesn't put a stop loss. Why? Just rationally think of all the stories you've heard, all the people you watch. Why do you not put a stop loss?
Can't be hunted.
What happened?
His stop loss can't be hunted.
Oh, right. It can't be hit.
Yeah, if he doesn't have one, nobody can come take out a stop loss.
Exactly.
Like whoever's trying to hunt for stop losses,
Right.
market makers.
So the only way that you don't put a stop loss is if you're trading not to hit your stop loss, right? Which means you're trading to win the trade, right?
Yes.
The philosophy is I'm not putting a stop loss because if it dips down and hits it and then takes off, I won't win this trade.
Yeah, that's the other thing. If it goes the wrong way first.
And that's the concept. In trading 101, which is actually perfect here, 101%, trading 101, that's the problem. The problem is you've been programmed that you're trying to win. And when you try to win, you do shortcuts to protect the opportunities to win. And one of those shortcuts or one of those things you can do to ensure that you win is remove a stop loss. Now, this is why trading 102 is all about losing. If he was trading here not to lose money, would we see a 101% loss? No. If he was trading here not to lose money, the most we would see here is a 10% loss. And if he was trading to lose even less money, we'd see a 5% loss. Because the biggest thing we could see here is a $100 loss or a $50 loss. See what I'm saying?
Yes.
Different mindset, different results. So, now that I mean, look, he lost 101% there, and then on the very next trade, he blew his account.
Yeah.
With another no stop loss. Now, most people, we're not going to be able to see this type of history because when they're supposed to post their entries and their losses inside the Discord, their entries, they don't post this. So I can't see this. So now that I'm seeing it, now I can easily revamp a system and easily fix this. This is nothing. This is easy to fix. Right? Like, the simplest thing in the world here would be like, all right, bro, listen. All you have to do is stop losing 100% and maximize your losses at 10%. So let's count backwards, right? Just an example here. It's kind of funny. Like when I see these things, it's like blows my mind sometimes. But let me see here. Okay, iPhone. There we go. All right, so let's just work backwards. We have a $100 loss here, 101%. $300 loss here, right? Go down to the next one. A 47% loss here. So we'll say 87. We'll take half of that. That would be $40. Okay, here we go. This is kind of close to it. We'll leave the 17. Here's 10%. That's fine. Here's 30%. So that's $20. Here's another 45. That's another $40. Here's another 216. So that would actually be $180. 117 at 30% when it should be 10. So that's another $70. Let's see here. And that's 1%. That's good. 1%. That's good. 7%. That's good. 3%. That's good. 10% is good. 33, which means we would have another $50. 35%. That's another $50. 23. That's another $40. Okay. And then we get here. Look at this, $432. So that would be $300. I mean, is that crazy or what?
It's pretty crazy, but I've lost more than that.
Yeah.
Not
But
bad.
when you break this down, right, and all I'm doing here is just giving him 10% losses, and then just taking so like here how he lost 21%, 35. I'm taking half of that because he should have only lost 10%. So I'm adding $15 to his goal. Here, his $50, that would be $25. Here's $125, that should be half. Okay, here's $20, that should be 10. Here's another 40%, $249, when he should have only lost 1/3 of that. So let's go ahead and add that in there. Okay. All right, 10, 11% is okay, 13%.
So if you get to stop loss now,
Yeah, so I mean, so what I'm doing here is I'm doing a quick add up here because this is the first. I haven't seen this account for the last day, so I'm looking at it right now. So this is just from the day. This was the crazy mayhem over the last week. I'm just adding it up. 175, okay. 3%.
why are you looking at it? You know that it's just because he doesn't use a stop loss.
Well, because because this is where we do the video on it because this is where he blew the account finally, right? So now I'm just looking back at all the different losses, and had he just done the basic stop loss over the last week, for the last 10 days, he would basically, it's a difference of, okay, so right here, this account, had he not done had he just stayed at a 10% stop loss, instead of this account being 0, he would have $1,925.
It's a lot of money. Huh?
So since May 1st, the last 10 days, by not using a 10% stop loss or a 7, but a 10 basically, there's $2,000 missing. Right? So that's kind of where we don't think of it, because the only thing we look at is wins. Right? The wins aren't the problem. It's the losses. So how to calculate this formula is very simple. And if you don't have data and you don't have your data, then you start out where you're not the worst trader, because we don't know that yet. The middle trader could be everybody, the average. And the better skilled trader, which is someone who is better at entries, because you're going to get, your skills are going to come. You're going to learn how to use tools. You're going to be better at, doing the tools. You're going to be better at evaluating the tools, right? But we start everyone off at the basic same skill level. So let's just say everyone who does the trades has a $1,000 bag. Their goal is 20% to 30% targets, right? So they target 30%, and then their loss is 10%. Because when they win, it's 200 to 300. When they lose, it's 100. That's the middle ground, okay? 10% stop loss, 30% target. Very simple. Now, that number is going to change and it's going to move based on the data you collect from yourself. I can tell here by looking at the wins, the average win, and just like you could tell, the average win, even though there's 250% wins, 160% wins, 80% wins, when we average it all out, it's about 30 to 45%. So we take the lower side and say, okay, the average is 30%. Now we know that out of $1,000, that's going to be $300. every win needs to cover 3 plus losses, minimum of 3. So that means that when we lose, our only option is we can only lose $100 per trade on $1,000. And if we want to double our chances of getting better or save our money, then we would only lose $50 per trade. And what happens is when you're focused on the losing part and you say, well, you know what, I'm going to start off where I'm not comfortable losing $100 per trade right now. So I'm going to trade $1,000, but I'm only going to lose $50 per trade. And my target is going to be 25 to 30%. 25 here because I don't know where I'm at right now. So maybe I'll do 20 or 25%, right? And you start off with your $1,000. Now the reason why you do that is because you're operating the way you're supposed to, and you're going to make decisions based on not $100 trade or like not real money, but actual money that you're going to then say, I need to master this $1,000 move because in a month I want to be doing $3,000 a trade. Right now I'm not into a $100 loss, so the most I can lose is $50. And when you do that, what's going to happen is you're going to start to develop the most important system that you have, which is the entry. That makes sense?
Yes.
So now, if you know that you have a $100 per trade loss budget, but you're going with $50, now you know that you have to make your entry even better. Does that make sense?
Yes.
And that also changes your system, right? The system is basically the size of the bag, the amount you're willing to lose or allowed to lose, and the leverage that you can use within that system. That make sense?
Yes.
Okay. So now let's move over to a trade, and let's kind of go through the basis of how we would produce that. Okay?
Yes.
So let's say that we're looking at, I just don't like, XRP is more like my long trade. I'll buy and hold for a long time because it kind of like settles on levels, and it's not really that great of a mover. But I do like Doge. And Doge is somewhere you can, it moves with Bitcoin. It has a nice little, amount of movement. So here's how you would create that, right? So if you have this system here, and let me see what this is. Okay, here we go. And this is kind of like the ideal of the ratios, right? The breakdown. So what we're going to do here is we have our ratio, and we're going to put it in here. So we know coming into this, we have a $1,000 bag. Our maximum stop loss is 100. We will be looking to lose only 50 of that, and our gain is 30%, right? And we'll be looking to get at least 20% plus. Okay, so now that we have the basis of our trade, this is the basics. $1,000 in my trading account, in my futures account. I'm only going to have a $50 stop loss. I'm going to shoot for 30% to 20% plus. And this means that starting out, I will be working with a 5x or 10x leverage option. Okay? So now, this is the basics. This is how easy it is. Now that we have all that, we can slide that over, and now we can take a look at, how we're trading. So let's say, for whatever reason, you want to make a trade. Let's say at this current moment, you found this trade, and whatever triggered the trade, right? Whether it was the 4-hour RSI headed up, a green moon, right? Or let's say right here, we were doing the entry where we were entering on the next green moon. So you see how we have a green moon and then a blue moon?
I don't see anything.
Oh,
I see.
Let me move you
still
over.
a list.
Hold on. Let's rotate the screen here. Share my screen.
I was just writing down what you were saying.
Yeah, let me show you here. Okay, so I'm going to move over to Doge. We're done with the chart. Okay, so now you should see my Doge chart.
Yes.
Okay, so now let's say right here that we're deciding that, okay, for whatever reason or for whatever purpose, we're about to enter this trade. So let's say that the 4-hour RSI is headed up. Let's say that, the 1-hour green moon is here. The trade is live. Now we move to an entry. So what is our entry? Our entry is basically going to be a green, blue, and then the next green moon. Does that make sense?
Yes.
Okay. So now that we have that philosophy, let's see here. Where are my indicators? Ba-da-bum, ba-da-bum. Okay. I'm gonna move this down for you here. That was what I was talking about there. $1,000 bag. Yeah, maximum stop loss $100 to $50. Gain 30 to 20% plus, and 5x to 10x option. So that's in there. So why is my
So do you always put a take profit? You can't be, because everybody gets more than 3% a lot of times.
Well, so what's the question again?
You just don't always put a take profit out.
Well, yeah. So, I mean, you want to put your target there because you never know when it spikes, right? You want to become systematic. You want to be able to jump in, do what you're doing, and kind of like move on from where you're at. Let's see here.
You're just saying at the beginning, put in the take profit.
Yeah. Set it up, get it in there, so that way you're already set to go. Okay. So let's say you see that. Let me move this chart here. This should be Doge. Not sure why that chart took away all my info. Okay, there we go. Doge. Okay. So you see the Doge chart right now, right?
Yes.
Okay. So basically, this is how we're going to set ourselves up, and that's what we're going to aim for. Now, what I was saying was, you see this green arrow here, or the green moon. So we're on the 10 minutes. So we're going to have. You see
so it has to reset.
Yeah, well, it already did. So you have a green moon. We had it here. So let's say that we were going to enter on the next green moon reset. So that's the green moon. It goes blue. And then the moon that we would have entered on is this one right here. Okay?
But you don't enter on the 10-minute.
Yeah. So this is the 10-minute moon, right?
Right.
So let's say that you were going to enter on this 10-minute moon here. Right? So you had a moon.
What's wrong with entering?
Say again?
Why can't I enter on the 10-minute?
Yeah, you can enter. Yeah. Whatever it is, right? So whatever.
Well, what it is, because everybody goes lower than the 10. After they confirm everything on the 10, then they go to the 3 or the 1 or whatever.
So what they do is this, right? And I'll show you what they're doing. So if you had this to where you were waiting for this 10-minute moon to hit, this would be your buy zone. Okay?
Okay.
So what they would do is they go down to the 1 minute just so that they can see what the patterns look like, or the consolidation. So right here at the beginning of this green box right here, This is where people are deciding to enter. You can enter as soon as that green moon hits. Okay? Which would be basically, it would be somewhere off of this candle right about here. Okay, does that make sense?
Yes.
Okay. I'll make that a little bit bigger. So that would be the possible entry from the 10-minute candle. Now what they do is sometimes they'll come over here and they'll see what they're looking for volume, right? Like where the volume is here. So you can see the volume is starting to break above the 10 line right there. So that's why they're looking at here. They'll go from the 3-minute, and really what they're looking for is, you see here how that green box is up there? I'm going to put the green box inside of the moon indicator so you can kind of go by what they're looking at. So in this area here, what they're determining is if there's enough volume here that would indicate that there is enough price action that this would go up, right? This is why you see the guys go and say, okay, I'm waiting for at least the 5-minute to break above. You see what I'm saying?
Break above what?
The 10,
0 or 10?
The 10 threshold.
10.
Yeah.
That's what.
Yeah, because the ideal is this: once it breaks above the 10 threshold, right, it will have a pullback and then go back up and keep pushing, right? So a lot of times that's going to be a trade process, something on the 10-minute plus, right? So you see here how we don't have where the 10 minutes. Okay, so if we back up a little, right? You see back here on the earlier area, you can see that the 10 broke the threshold a little bit further back, right? This area over here. And what they're looking for is confirmation that once it breaks the 10 threshold, okay, that it's going to basically pull back down. And then when it starts back up, it's going to be the movement that it makes, right? So here, you see right here, it breaks the 10 threshold. You see where that blue arrow is? So what they're waiting for is they're always waiting for the entry. So they wait for the pullback. And when that pullback happens and it starts to go back up, which is normally, you can see right there, that next candle right there is starting to head up. Let me put this, I don't have my mouse on me. So I'm just, you always want to have a mouse when you deal with trading view.
But why do you want this second move, BC? Because it's smaller than the first one. So it's not 3, right? On the Elliott wave?
Well, okay, so here's the thing, right? So this is, right here, we're not going through a full trade setup, right? So what I'm showing you is once those other things happen, this is an entry position, right? I have no idea where the 4-hour RSI is here. I have no idea where the live trade is. This is the entry steps. So the entry steps normally would be on the 10-minute threshold. Once they're broke, like they did right here, you would wait for them to pull back, and when they start to head back up, which is this right here, this orange right there, that's where you would decide that you would be making an entry off of that move up, right?
Right.
Which would basically be right here.
Right.
All right, that would be the move up. So which means you'd be entering somewhere off of this candle here, this wick here, right? And that's where you would be locked in, okay? Now, all the other variables have to come in. This is just an entry point, right? This is all I'm talking about is entry. Not how you got here, not the 4-hour, the 1-hour moon, the extra volume. What we're talking about is the moment you decide to enter, right? You would be looking for the volume to be above the 10 threshold on the 5, 10. The bigger the time frames, the more secure the trade. This is a 10-minute. A lot of times you would wait for the 15 to break and then rebounce and then go up, right? Sometimes the 5-minute gives you a better early entry and it has a bigger move. And then you would avoid the 10-minute and you would just wait for the 15-minute to recycle, right? That's something we can cover on a different time. What I'm showing you here is that why people break the 10 threshold, okay? Now, what I want to cover here is basically the fundamentals of the trade. Doesn't matter all the other stuff. What matters here is once you have a decision that you decide to enter, right? Don't worry, this was just a separate lesson over here. But once you have a choice, which is this green box over here, what we're saying is if everything goes the way we want it to go and we're about to enter right here on this order, and we're thinking to ourselves that at this current time, this particular trade here is where I'm going to enter, right? So you're going to enter at 11,076. Does that make sense?
Yes.
Okay. When you have that number and you know that you're going to enter there, what you have to do is calculate your scenario, okay? Which is you go over and get a long tool on the left. You post your long tool based on your entry, okay? We already have the formula that we're testing. The formula is very simple, right? It's a 5x or 10x leverage. So let's say that we're doing a 10x leverage, which simply means that for every 1% it moves, right, that would be equivalent to the multiplier of 10. So that means that if it moved 1% down from where I'm entering, which would be down here, let's go ahead and open this up a little bit. That means if I was doing a 10x leverage, then this could move back 1%. You see how it said 0.98? So that's basically a 1% move down. Does that make sense?
Yes.
Okay. So that means that if I was doing a 10x leverage, based on that, this lower level here, it's such a pain without a mouse. What basically that means is, at this point, I could only pull back. If I was doing a 10x leverage on my $1,000 trade, the maximum that I could lose is $100. This is the pullback that I could go to. If I'm only losing $50, that means that my pullback would only be 0.5%. If I'm doing 10x leverage, right, which would be somewhere around there, that means that my pullback, I'm allowed, could only go back to this level here. Okay? This is all based on a 10x leverage. So if I entered at 11,076 like we're planning, my $50 loss could pull back to the first yellow line. My $100 loss could pull back to the second yellow line. Does that make sense?
Yeah.
So now when I look at this trade and I piece it together, I can review on how it looks, right? I can look at this and go, okay, if I entered right now, this is the scenario, right? This is going to be how it looks for me. I'm just going to pull these down because the other stuff doesn't matter. Okay. So if I enter this trade at this level here, I have two stop losses. I have my $50 stop loss. I have my $100 stop loss. This is with me doing a 10x. Now, what I can do is I can see based off of, let's go to the 1 minute. I would go to the 1 minute time frame. And now on the 1 minute time frame, I can see the levels better. You see? So if I looked at the last, let's say, 4 hours of this particular chart, on it, what it's been doing for the last 4 hours, I can see a channel, right? So if I go back, you can see that there's really, it's been kind of up there, and then if I extend these lines out over here, I can see that this is probably this $50 line is probably going to be sitting on a support area that was a lot earlier back in the day. And the second line, the second yellow line, is kind of like a line that doesn't really coexist with any other support or resistance, right? You can see that on the chart there.
Yes.
It really hasn't been hit over the last 4 hours. But that second one, I can see where when it first took off, it did pull back to that level. So the odds of that coming back to that level is probably good.
Very good. Yeah.
Right? So I don't know if I want to put my stop loss on a support zone. So I'd probably put it a little bit further down. And then what also this does is you pull back, it kind of gives you an area of because you remember what we're working on here is we're doing a 10x leverage, and we're shooting for a minimum of 20%, 25% to 30%. We would be looking for a target somewhere in this area here, right?
Okay.
So normally the thought is this, right? When you're thinking about winning a trade, you start thinking about from your entry, it going all the way up to that other level, right?
Yes.
When you're thinking about not losing a trade, it becomes a little different. This is where you would say, you know what? I don't really see too much resistance at that higher level. So what I want to do is I want to trade where it's already trading. So instead of making this hard on myself and hoping for a good scenario, what I'm going to do is I'm going to drop down my entry to that lower support area, which would now bring my $50 loss down to that next lower level. See what I'm saying?
Yeah.
And now instead of having to go so far up, because originally over here, I was looking to hit this level here. Let me get this target here. Okay, where is price label? I need, from here, I need this to run all the way up to here for me to make my 25%. But if I drop this down to here, which is an area that it could go back to, I'm now targeting a lower position. You see what I'm saying?
Yeah.
So the odds of my success have just became even higher. And I've also opened up the door where my entry is even better. Right?
Yeah.
So in my mind, if I look at this trade now, I feel a little better that this is probably going to be a lot more successful than the other original trade I started, right?
Yeah.
And I might even say to myself, you know what? I might even get a little more greedier here. And you know what? I'm just going to drop down to this lower area here, and I'm just going to create a new stop loss area for $50, and I'm going to move it to where it would actually be down here. Okay, get rid of that. Let me touch that. There we go. Touch that. So now my stop loss for $50 is here. My new entry, instead of way up here, I'm going to enter off this lower level down here. This is my new entry here. And now my new target is here. See how that works?
Why didn't you pick that entry again?
Because I'm not,
Show me.
so here's your original entry at 11.076.
Yeah.
Okay. If I looked at my 10x leverage option and I entered right there, my pullback to my $100 loss would be down to that super wick that just hit a little while ago. And then above that is my $50 option as a loss. Well, when I looked at the $50 level, it was more of a common level that I could see it coming back to. So my job, I'm not trying to win the trade. I'm trying not to lose the trade. So then what I do is I adjust down to the next lower level to increase my entry. My entry just got better. It's a greedier entry, which also means my original target to go up 2.5% has now come all the way down, because now I needed to go up even less. So I don't need as much volume as everyone else needs because I'm moving my target down. Does that make sense?
Yeah.
So then as I move through there, I can evaluate the best entry. So at this point, I looked at it and said, you know what? I'm going to take that super dip there, and I'm going to play that as my entry at 10.96, and now my target is only 11.23. And I'm going to run my trade at my 10x option. But now I've increased my stop loss even further down, which makes the odds of me losing this trade even better and me hitting my target even better.
Yeah, that makes sense.
So now, all I do is, once I set it and forget it, I just come back and see how it plays out, right? If the trade drops all the way down and grabs it and takes off and it wins, great. If it comes all the way down and hits it and then goes down even further and I lose, that's okay too. Because that means that my other two entries would have lost as well. Does that make sense?
Yeah.
But I increased my opportunity by 2 extra trades. Now, the benefit of this is if it doesn't pull all the way down and it goes the way it's supposed to go, and I write that down and I say, okay, I didn't hit this target. Let's say that it pulls down, right? It doesn't pull down as far as I want it. It pulls down right there above my entry, right? All I do here is I don't really care that it didn't get my entry. I'm going to turn that yellow. Here's what I do. I go back, I measure, I bring my measuring stick down, I go to where the entry actually hit, and you see how it says 0.21 on the green? Yeah, let me show you. All right, there we go. This thing doesn't do. Yeah, I gotta get my mouse. I'm traveling right now and my mouse is gone. All right. But here, so let me hit that again. So you see on the percentages, on the green on the top, it says 0.201%.
Yes.
Okay. I write this down because it doesn't go all the way down there and it goes up. I write this trade down and say missed trade, Doge missed trade 0.20. Now I know that I've missed this trade by 0.20. Does that make sense?
Yeah.
And I repeat this process. And once I get 10 trades, if I realize that by doing my formula, I continue to miss this long trade by 0.2, 0.3, 0.4, all I simply do is when I get the data off the next 5 trades, let's say that I do this trade 5 times in a row, and I missed it with 0.2, 0.1, 0.3, 0.1, 0.2, right? All I do is when I set this entry, I then simply move up the entry by 0.1. Does that make sense?
Yeah.
And then instead of it being 10.96, what I would do is this. I would say, okay, I'm missing this entry. Open this up. There we go. I'm missing this entry here by 0.1. So then all I do here is I take my long tool and I move it up by... Why do you keep deciding not to let me control that? Thank you. I take it and all I do is basically... Alright, 0.2. It doesn't want me to do what I'm trying to do. Style. Alright, so I need my mouse. But you get the point. What I would do here is basically move my green and just measure my tool, and I would just move my tool up, there we go, 0.1 like that. And then that means that my new entry would be the top of there, 10.968. Does that make sense?
Yeah.
And then I run the next 4 or 5 trades the same way. And then as these start to hit, I'm collecting data. Right? The data is, now that they hit, did I make my 20% to 30%, or did I hit my $50 stop loss? Because once I'm in the trade, I'm in the trade.
Right.
So now I'm either hitting my target or I'm hitting my stop loss. But what I've done is I've created a greedy entry. So no matter how I decide I'm entering, when I decide there's a live trade and I say this is my entry, and then I put in this formula where I write down my 1% pullback, which would be times 10 would be $100, and I put my, and I say, you know what? Here's my 50% pullback for $50. Here's my $100 loss. And I look at the lines and I go across the last 4 hours, and I see if there's, in the last 4 hours, if there's any support and resistance that keeps hitting. And if it's lower than my current entry, I bring it down to that area. And if I see that it's even further, I go down to my $100 area that I would normally have lost, and I make that my entry.
Right.
You see what I'm saying?
I didn't know all these. Okay, that's awesome.
So now at that point, I'm always entering 3 levels lower than my current entry, or 2 levels. And then what happens is, like I said, we're not covering why we're entering. I'm not going over the 4 hour long, the RSI is heading up, there's a 1 hour green moon, 10-minute, right? What I'm going off of is whatever video, whatever theory, whatever thing that you find makes a good trade. And then you decide that you're doing a 10-minute reset, and it hits, and you're about to enter. You take this formula, measure it out, find your $50 loss, find your $100 loss on a 10x leverage, right? Because that's all that matters. Is if it loses, it's going to $50, and if it loses, it's going to 100. And then look at those levels and see if they have any support and resistance in the last 4 hours. And if they do, drop your entry to the next lower section. So if the $50 area doesn't have any support or resistance over the last 4 hours, then you pretty much can say to yourself, okay, this looks pretty good. You can rock and roll. If you say to yourself, you know what, I'm going to just move my entry every time to the $50 area, and then that way my $100 area of losses is now only 50. So I'm doubling my stop loss area by just creating the first, you know what I'm talking about, the 0.5%, which would be $50, becomes your entry, and the 1% move becomes your new 50% stop loss. Your 0.5, your $50 loss. Make sense?
Right.
And then from there, as you move along, if you realize that those entries are missing by 0.1, 0.2, Or maybe they're blowing through them and going even further. And then you say, you know what? I'm going to move my entries based on how I'm entering right now. I'm going to go down, instead of going to the $50 area, I'm just going to go all the way to that second line, which is normally where I would lose 100. And I'm going to start putting that as my entry. And then my stop loss is $50. And then I start tracking how it goes from here. Right? So while your basic goal is not to lose trades, but what happens is you're creating areas where if your trade does hit, you've created such a lower greedy entry that it doesn't have to go all the way up like everyone else needs. It needs to go up less. So your odds of success are higher.
Okay.
Because you don't need to be in a trade. What you need to be is in the best entry. Because the only way to the only way not to lose a trade is to have the right entry. Does that make sense?
Yeah.
So that's really what you're focused on here. Is you're basically setting yourself up to give yourself the best possible entry if it does hit, and the easiest target going up that needs less volume to be successful. And all you're doing is, by doing that same formula over and over, you're marking down the distance that you didn't hit, how close you were each time, and you start adjusting for those moments that you barely missed. Right? Because what you're doing is you're creating your skill. Your skill is your entry, based off of how you find a live trade, how you set up the whatever 5 minute, 1 minute, 10 minute, depending on the coin. All coins are different. What moon reset you're using to enter, what time frame you know what I'm saying? And then when you do enter, you're collecting the results of your entry, and you can start putting the mathematics together to where you start slowly inching up your entry until it starts hitting a little bit more. Remember, you don't need to hit every trade. You just need to not lose a trade. See what I'm saying?
Yeah, that makes sense. I didn't even understand all that.
Yeah. See, we're not here to win trades. We're here not to lose. Or basically, we're here to lose properly. Like when we lose $50 and it's set at the $100 line, in reality, we lost 100 plus our 50. We really would have lost 150 on that trade if we entered where we wanted to. But by adjusting, we only lost 50. So we're winning. See what I'm saying?
Yeah.
And then when we do win, our trades are easier, are more successful because they're easy to hit. And our one winning trade covers our 3 losses. So if we win 3 trades, we can lose 9. And once we start cleaning up our entries, we'll stop losing 9 and we'll only lose 6. Where now our 3 winning trades covers 6 losses and gives us 3 wins, which is 30, 60, 90%. Does that make sense?
Yes.
That's what Trading 102 is. That's the beauty of it. It's what you focus on. When you focus on winning, you make mistakes because you try to do more to win than you should. When you focus on not losing, you tighten up. You lose less, which means you make more. Comprende?
It's pretty smart, yeah.
Yeah. Every once in a while I have a moment. Right, babe? My wife thinks so. My wife thinks I'm smart, so that's all that matters. So that's what, you have to, that's what we focus on. We don't care about winning trades. We care about how we lose. For every $50 we lose, we didn't lose 100 extra. So when we win, They're actually winning with purpose. And that's what we have to do. So that basically, I wanted to cover that today for this video, and I'll post this inside the Discord and let everyone know, hey man, go watch that video. We just covered really good shit on 102 and the breakdown of it, right? The first thing I wanted to know was, in the videos that I made, do we understand how to, make a live trade? And it sounds like that's in there. The second part was, do we understand how we're supposed to post? Because that's data, right? And now we covered at the back end of this video how to, whatever, it doesn't matter what strategy, whatever system, whatever you come up with, what you're figuring out from the videos of how to trade. When you come to the moment that you're about to place a trade, you now have a formula that you will use to determine how and what you're going to trade. So you have your $1,000 trade, right? You have $1,000 in your futures. You know that your maximum wins are 20 to 30. So you're only allowed to lose 100 to 50 bucks. So on a 10x leverage, that's a 1% move or a 0.5. And once you know that, you adjust the entry to give yourself a bigger cushion if you do lose. You turn your 50 bucks by getting a greedier entry, you gave yourself a $150 stop loss, but if it does hit, you only lost 50. That's simple. Now, the winning part's basic. Once you get to where your trade takes off and you have a 30% target, if you're not paying attention, it hits 30%, you're done, it closes automatically, rock and roll. If you are watching it and you see that you have broken the 15% gain mark and you have got into like 15, 17, 20% area, you can then move your stop loss from $50 to the entry position, meaning that if it does go the other way, you don't lose $50, you lose basically just the fee. You know what I mean?
Right.
And then as it moves closer, if you see it and you realize as you look at the chart, like, oh, this is starting to build momentum, maybe you take your target, move it from 30 to 50, and when it breaks 25, 27%, you move your stop loss to 15 or 17% profit, and then you let it go for 50. If it doesn't hit 50, you don't catch it. If it gets up to 35, 40, you move your stop loss to 25%, and now you have a 25% stop loss or a 50% target, right? If you get caught in between where you go for 50, you move your stop loss to 15%, it goes the other direction. You just count that as an even mark. It just you didn't lose anything. You hit 15%. Remember, the goal isn't to win. The goal is not to lose.
But you don't use the trailing stop loss. You just do it. You just move it for watching it.
Yeah, I mean, you can go in there. I've never used a trailing stop loss, but there's videos in there on how to use it. You can test it out and run it. I've never run the trailing stop loss.
I don't know how to use it.
Yeah, but you can take a look at it. We could pull up some BitNex has videos on their trailing stop loss. I'm sure you can find a million different videos on it.
Sure.
I kind of
There's
like.
Always another.
Yeah, I like just having the, once I get to a position where, it's moving in a certain direction. If I move my stop loss to, entry, and I go for 50, and then once it breaks 20 or 27, 30, I just move my stop loss up to 20, and I'm basically 20 or 50. You know what I mean?
Yeah.
And that's where I stay, because remember, the habit is this: when you're trading with $1,000 and you're watching this happen, you're less likely to go for 50 or anything above 50, because once it gets to that area, you're like, well, that's $500. Now, if you're trading 100 and you get to 50, you might say, you know what, I'm going for 80%, because it doesn't seem like a lot because it's $100. But in reality, if you're trading the bag you're supposed to trade, then you're seeing the money you're supposed to see. You're not going to push higher than 35, 40, 50%, because that's $500. You know what I mean? It's not $50. It's not $45. It's 500. You don't need to go for 60, 70, or 80. You don't train yourself to take more risk because the bag's only 100. You see what I'm saying?
Yeah.
You're working with what you're supposed to work with, so you're always making decisions based on the correct bag. And as that bag becomes 2,000, 3,000, you don't even think about 50% anymore. You just say, I'm taking my 30. Because 30 on 3,000 is 900. And I only need to hit two $900 trades a week.
That's a lot.
That's a lot.
It's a lot to me.
Yeah. I mean, if you take $2,000 and you hit that, what's that, 56 weeks? So $100,000. So,
Awesome.
yeah. So that's why all the philosophies as I really been diving into the mentality of people and understanding of, like, it's not the systems, it's not the the strategies, it's the person. It's the mindset is wrong, the goal is wrong. They're trying to win instead of understanding how to lose. And once you understand how to lose, the winning part is easy. Protect your profits. You don't make not 7, 8, 9 trades in a row to make 800 and then lose 400 two times in a row.
Right.
I mean, that's just makes no sense. So that's what I wanted to cover today. So the next thing that I really want to focus on, and I'll talk to Lucas, is basically the overall, like, being in the how to get the trade. So what he's going to be doing is he's posting every day. He's posting what he's trading. He's posting, charts. And I think the next thing, besides this mathematics was important, because when you decide to take a trade, even if you're going off something he's talking about, you start implementing this formula into your strategy so that you have something to build on. Because once you see the numbers, you can start adjusting the entry higher to get yourself an entry. You see what I'm saying? But what I want him to go over is, as he's posting charts and posting entries and trades that he's doing, that you guys understand when he posts something, what he means by it, and how you would go and set up an entry for yourself. And you can make those trades and be like, okay, here's my entry, this is what I'm going to do, here's my $50 stop loss that I would lose, right? And you can basically follow simple call outs that are being called out by people as they find trades. And really just get into the next week is really just, this is all you need right here to kind of build where you're at, right? As far as, like, understanding which wave you're in is, that's just, you don't have to really worry about that too much when you're trading with the 1 hour RSI headed up with the 4 hour, and you have like a 1 hour green moon. You know what I mean?
Say that again.
So for you, if you're thinking like, what wave am I in, right? So like, okay, if I'm looking right here, so here's Doge, right? And in this box, this is the 1 minute, right? And we can see that we had a push up here, and then we had a pullback, right? So normally what's going to happen is it creates a channel, which it looks like it's doing here. So this channel, more than likely, even though you have your wave 1, which is the bottom of that, to the top, what it's doing now is it's creating a cluster that's in this section here, right? And that cluster is basically going to be, it's going to be where it touches that bottom, goes back to that top, and it's going to do that same move over and over until eventually it breaks out. Now, if you're trading the 1 hour, the 4 hour RSI up, more than likely you're trading to the upside, so you'd want to buy the lower part of this box where it is now. And you're trading that it goes up to that next section, right? The top of that box, right? And what you're trading,
just using the box. You're not counting the waves.
Yeah. I mean, waves are like this, right? So the waves, is just for you to be in a scenario where if I looked at this trade and I seen this move here, right, where I see this big move happen here, and then from there was a pullback, and then all of a sudden it finished here, right? This is on the 1 minute time frame. So if I go and I take a look at my 10 minute, right, and I'm looking for a wave by chance, and I looked at this section here. Now, if I'm looking at a 10 minute, okay, give me that, all right. There we go, okay. And I looked at this section here, I can see that once I look at this 10 minute, now on a 10 minute, I see that first move was from down there, and now I can see that we're going into a second pullback, which is basically where we're at now on my 10 minute. And we can see that we're kind of in that section there. So now that's done. Now it comes back to what is making this go up, right? So the three wave thing is like, the reason why we go over that is because let's say that you're looking for a 4 hour up, a 1 hour moon, a 10 minute reset, and you look at the chart on the 10 minute and you see that it already pushed up, like right here. So let's say this has a 4 hour RSI up, a 1 hour moon, and I see this push and it's pulling back, right? I would look at that like, oh, I need my pullback. Now if I got here and there was no pullback, so let's say I want to go long, but I don't see a number 2 pullback, I wouldn't enter until I seen a pullback. Does that make sense?
Yeah.
Like the three waves is just to make you think to yourself, I'm about to enter, oh shit, it hasn't pulled back yet. Like definitely like at least up to a 10 minute, you want to see a 10 minute pullback.
That's right. That makes sense.
So now that this is pulling back, this is where we would be looking to enter. Right? So if everything else, right, lined up where the 4 hours heading up here, we had a 1 hour moon, and then the 5 or at least the 5 minute threshold was broken on the volume, I could see this as going in long right here.
Okay.
But anytime you go to a trade to get in and it's only heading one direction, you have to let it breathe. It has to pull back.
Oh, that's what we were saying.
Mm-hmm. But like
Have
I said,
you ever read that?
Which
Have
one?
you ever read that book, VC? It's called Best Loser Wins.
No.
I read that book.
Did you? I've never even heard of it.
It's a famous trader wrote it.
The best loser wins.
Best loser wins.
The best loser wins. So what's the concept? So give me something that you took from there. What did you learn?
You have to have a better mindset of losing.
Oh, okay.
His friend says you have to not be afraid to lose.
Right.
You have to learn how to control your emotions about losing.
Right. Okay. Yeah,
So
because
it's all about changing mindset on thinking about losing.
Yeah. Typical thing is this, right? If you're trading to win, the concept is you have to trade systematically. So you have to understand that you're going to lose trades, and if you lose trades, it's okay because you can't let that become emotional and stop you from making the trades that you're supposed to make because you're trading a system. And if you don't trade the system or trade the law of average, right? So basically like this, right? So in marketing, there's a concept of every or sales, it's point of contact. Point of contact is if every 100 people you talk to, it's called the 10% rule. 10% of those people will talk to you. So if you stopped 100 people inside of a Walmart or somewhere, and you said, "Hey, excuse me, did you see the sales today?" The reality is 50% of those people won't talk to you. They're too busy. The last 50, 25% of them will stop and hear you out and say, "Oh, I don't worry about that." And you get down to where you're set with the last 20% of the people, and then 10% to half of those people, which is the people who are interested in sales, only half of them will listen to what you're talking about. So you have a 10% chance of being successful. So what that means is, based on what we call a law of average, means that if you say hi to 50 people in a row, and then you let 4 people walk by, and then say hi to the next 50 people and go, wow, that theory didn't work. Well, that's because the 4 people you let go were probably the yeses. So if you're taking 10 trades and you're following cup and handles or head and shoulders, and you do 5 head and shoulders in a row and you lose, and then the next 3 head and shoulders you don't take because you're scared, but then you try to take the next 3 head and shoulders and you lose again, and you say, this shit don't work, without realizing the 3 head and shoulders you didn't take probably won. Because if they have an average of 30% being success, you don't know which 3 out of 10 are the winners. You can't take a break. So what they're trying to teach you is the best loser wins, meaning the mindset of understanding you're going to lose. Don't let emotions change you from completing your strategy and doing. They say basically you got to do 100 trades in a row to figure out if the trade works. You don't need that many, but that's the concept. So that's kind of what they're teaching you in there is don't let emotions get to you. You're going to lose. You have to accept losing here in order to be a winner. Pretty much, right?
Well, this guy even takes it to the limits. Like, he's really able to push his limits because he's not afraid to lose.
What does he do?
So
say it again.
Say it again. Say
no.
That, what?
No, what do you say it again? What does he do?
I was just saying he takes it to higher limits as far as his risk taking because he's not afraid to lose. This is why, and this is his success.
Right.
He's very successful.
So his success is basically he's a higher risk taker, so he has more reward.
He's a higher risk taker because he's not afraid to take it.
Right. So
he
he
just changes
his mindset.
I mean, I realize it's a little different, but still, it is still about changing the way you think about losing.
Yeah. That's a higher risk though. So.
Well, that's true, but still, you still have to change your mindset. Either way.
Yeah, you got to change your mindset. Like, you got to understand you're going to lose. So that's why, and that's all about risk versus reward, 2-to-1 ratios. Don't take a trade unless you can make twice as much as you're willing to lose. Like, there's a million different ways to explain risk versus reward. A lot of people go, okay, look at the trade. What are the possible targets? $100? Well, that means you can only lose $100, right? And that's kind of what it is you why would you risk losing 100 if you can't make at least 100? And some people say, well, I won't take a trade risking 100 unless there's a possibility of making 200. And that's basically how they design their support resistance, where their target is the target possible, et cetera, right? And that is where the problem with that, and that's why I've created Trading 102, is that after watching thousands of students struggle with the same thing, I realized it's because everyone's actually, that book you're just talking about is the problem.
Well, but not always. It could be. I didn't read it because I want to be a risk taker. I read it because I wanted to learn how not to care about losing. I mean, I care, but like it just rolls off my back and I keep going.
Yeah.
Don't get discouraged.
Oh no, I understand
That's
completely.
Why.
But that book is the problem. The book is kind of like the thing, because that's what we call it hopium, right? Hopium's where the philosophies basically it goes down to this: 90% of people will lose, but if you become part of the 10% or you get an opportunity, if you have less fear and you play this game at a higher risk level, the rewards are bigger. Because the reality is that, I mean, it's just kind of looking at, like, you see where the earlier trader account we were looking at, his wins are 160, 220, right? He's taking, but what happens is when he's playing inside of the risk zone and he's being patient, he's winning. he gives it all back when he decides when he has the most value, he takes the bigger risk. You see what I'm saying? When you have no stop loss, that's no fear.
I mean, I really don't even know if you use stop losses. I wasn't trying to see how to trade it.
Oh yeah. No. But that's what I'm saying. It's the mindset, right? I know what he's trying. That's why I'm doing Trading 102 is because that theory on the other end is it doesn't have the higher, how to explain it. Its law of average is low, right? Which means that if you have a higher skill level of trading, you should take more risk, right? If you master entries and you master a strategy where 7, 8 out of 10 times your pullback maximum is 40%, but it always does what you think it's going to do, right? You should risk higher amounts with bigger stop losses, like 65%. But that's because you've mastered a strategy that is so good that you can risk, right? And you shouldn't have emotions about it because you've already proven it to yourself, right? The problem is that the theory that he has also takes a great skill set. And the one thing that we've learned here, and I've learned over the last years, is that we're talking about here. That's why I always say the game that we're about to play at its highest level, meaning guys who went to school, the guys who then took an 8-month trading course in the greatest trading companies in the country, in the world, their success rate is literally 4 out of 10 trades. And they're the ones taking the best education, right? And if they're doing small percentages like winning 1%, 2%, losing 0.5%, they win 6 or 8 out of 10, right? But at the end of the day, when you break it down and you put it into a number, they're only winning 10% out of 10 trades.
That's pretty.
Yeah, so when you look at the numbers and you kind of go, yeah, I mean, if I was trading, if you're trading and your goal is 1% or 2%, and you're trading a high leverage into so much volume, and you're trading a very specific way of trading that, like I said, is successful 7 out of 10 times. Like I said, you can break the number down. So let's say this is what I'm trying to teach you in Trading 102 is how to evaluate risk and reward. So let's say that you figure out a system, you win 8 out of 10, right? This is high leverage, and the average is 3%. So that means that you are averaging 3% 8 times, which is 24%. Which means when you take your losses, right? When you take losses, it has to be where those 2 losses can't overtake 24%. Normally it would be half. So you'd be willing to lose 12%, which means that you could give up 6% on those 2 losses. And normally you would divide that by 3, so it would be 4%. So you could lose 3 trades at 4% as long as the 8 trades you're winning or 7 trades you're winning is equivalent to the 3 to 4%. Does that make sense?
Yeah.
Then from there, why would you need emotions if that's been proven? That's what he's trying to tell you, is that you got to remove the fear, because once you have a system that works, there's nothing to fear. And the only thing that would stop you from being successful is being afraid to lose. You got to accept that you're going to lose 3 to 6 of these trades. But if you're a professional trader, and this is kind of like the basics, you're going to win 3 trades at 3%, which is 9. And when you lose, you're only going to lose 0.5% or 1. So which means at the end of the day, your 0.5% times 7, right, is equivalent to 3.5%. But on your 3 wins that you win because you don't have any fear, you're making 3%. So at the end of the day, you make 6% on every 10 trades.
Yeah, I mean, it's great.
Yeah.
That's very efficient and very hard.
Yeah.
For most people.
Yeah. So what I did was, the reason why I created Trading 102, actually I'm going to look up this book because this is excellent. That is what I was trying to explain to people, is that when you trade to win, it creates a law of average that is based on skill. And then everyone's forgetting that the skill levels are different. Everyone's not the same skill level. And if you play the way without fear and you don't understand your skill level, you will take a beating. But if you learn your skill level, like I said with Trading 102, and you adjust to how, instead of having no fear of losing and just basically saying, okay, I'm going to lose, but I'm only going to lose $50 because I know when I win 20 to 30, right? And this is how I adjust my entries to get even better at making my wins, but also creating bigger areas of loss that don't cost me as much. So when we adjust down 2 levels, we've created a $150 gap that only costs us $50. You see what I'm saying? So,
I just put it in the chat.
Yeah, so we're playing a whole different game. That's what I love that. But that's what Trading 102 is. It's the opposite of what everyone's trying to do. Even when people talk to you about winning and losing and ratios and risk and reward, they all teach it the wrong way. And that's what I sat around for the last year going, man, how to explain this? And that's why I was like, you know what? It's reverse engineering. I'm tired of just teaching. We got to go to losses. Forget teaching how to win. I'm going to show you how to lose.
I sent you the link.
Perfect.
It's in the chat.
No, I like that. That's a beautiful thing, because that's kind of where, that basically is what I'm putting out there and trying to prove, is that when you start playing the game the right way, which is not worrying about the winning and learning how to lose, then you change the game, because that's your problem. The problem is the losses. That's what you need to focus on. But instead of taking the risk, we're lowering the risk and then working on the skill level. And then once you figure out your skill level, then you'll realize that you have to adjust your entry even lower because you're terrible. But that gives you, because we're all going to be different, right? And the people with better skill, will be able to move their entry up a little bit higher because they have better entries. And the people who can't read the charts and get it right, they'll need to go even lower because they suck. But at the end, you won't have 90% of the people losing.
That's pretty smart.
Yeah. That's what I'm saying. That's what I'm talking about. This is revolutionary. There's a whole new world.
It really just helps me not be afraid to lose. That's all I'm ready for. Yeah. When I read it, I didn't know anything about trading. I hardly knew anything.
Yeah, and
so I didn't get any risk taker habits from that. Yeah. I got them from the last guy I was with, but I was going to get screwed. It's pretty risky.
Pretty risky. But yeah, that's what we're at, man. I mean, we're at that level. We're turning the corner of like, yo, this is no matter what you've heard before, you haven't heard this.
That's probably right.
Yeah,
I agree.
Yeah, and if you do the system I just showed you how to find your entry, pull it down, know what you can lose half of that, adjust down for the entries. Make your stop loss 3 times bigger than it was because you're being extra greedy on your entry, writing down where you're missing your entries, slightly moving up a little bit to try to catch them. I mean, man, if at the end of the day, we're telling people, hey, I posted that link. We got a WAP link where people can sign up for the 4224 a week and take the courses that we put in there. It's an intro course, and if they can prove it doesn't work, we'll give them $1,000. But it's also a way for people to do a $10,000 course and say, okay, I don't know how to use TradingView. Then you shouldn't buy any more courses. if this doesn't make sense to you, then you shouldn't be trading, right? We have other options. We have copy trading. There's other things you can do, but don't waste any more money if after taking the the Trading 102 intro course, if those 4 to 6 videos, we'll have 8 videos in them by the time we're done. If you take that intro course for the $42, if at the end of week 1 you do another week, spend $80. At the end of the $80, if you can't comprehend that, then you shouldn't. You don't need to buy any more courses. You're not going to get it. You know what I'm saying?
You actually tell people this.
Huh?
You actually tell people that.
Yeah, because that's honest.
This is not for you.
Yeah, it's not for you. I mean, because I've been doing this for 15 years, and I've created so many trading courses that people can do, but it's never been what I wanted. Where I've had 40% success rates, 60%, but I want 90. And this 102 course is 10 years in the making. So now that it's done, I'm like, yo, when you take the intro course. Right now, I think there's 4 videos in there, but I'll get done this next week or two. I'll have the rest of the cleanup videos that we're going through. If you take that and you pay $40 for a week, watch all the videos, pay another week, at least 2 weeks, and you go, I can't do this. Then you should never. This is not for you. Because by the time you watch those videos, you will know how to trade. You will understand everything you need to do. And if you can't do that basics, like protect your money, look for the best entry, understand what your job is, which is not to lose money while you're learning a skill, then this is not for you. It's just not going to happen. It's so easy that if you really can't, if you can't get that, you just can't get this, and you don't need to ever spend money again. And I'll do 2 guarantees. If you prove my system doesn't work by following it, I'll give you 1,000. And if you find another system where you can prove you're successful, I'll give you another 1,000. Because if you take my system and I tell you you won't be able to do anything else, and you prove me wrong, I'll give you $1,000. Because if you can't follow my system, believe me, you can't trade. I'm 100% sure in this. That's easy bet. You can't follow what I'm trying to give you, man. It curtains. You'll never make money. Just give it up.
That's funny.
But it's the truth. I mean, somebody's got to tell the truth here. Hey, man, I don't care how much money you spend, you won't make it. Now we have copy trading. Go do that. Shit. All types of things are coming. Hang tight. I mean, that's like everyone. I mean, everyone wants to play baseball. Don't mean you can hit the ball. This is a skill. People got to realize that this is a skill. And at some level, if we create, like, the System 102 is created to take the lowest skilled level and make them profitable. And if you're below that level, well, it's not for you. Because we can't go no lower. The bar can go no lower, basically. And
that is funny.
That's the truth. I can't. I believe me. 10 years after this, 10 years, I have lowered the bar. This bar is to the ground. And if you don't get it through this, you just give it up. It's not going to work for you. And some people will be like, yeah, I don't understand trading. I don't understand how to look at the chart. It's not for you. I mean, it's a very small percent who wouldn't be able to do it, but they have to be able to understand. Like, hey, you just won't. If you don't understand to break down what I just broke down mathematically and do the same shit on your own, not for you. what I did was not hard. Not hard at all. I mean, right? What I just showed you, right? How to find an entry, lower your entry, find your areas of entry, and then go down to your stop losses and make better entries. Was that hard?
No, I understand it.
Yeah.
I just have to practice.
Exactly. I mean, that's what I'm saying. If someone can't, understand that or fathom that, lesson, it's not for you. Nothing will help you. That's like the lower. There is no lower to this bar.